Hi, this is Zach Meir with the US Chartbreakers here at Zach's Traders Cafe for Thursday, the 2nd of May. Starting off with the S&P, and here you can see that we are between the 50-day line, 51.30, and the floor of that rising trend channel from October around current levels, say at 50.20. Below 50.20, it's obviously where we marginally are at the moment. Then there's a risk of a move down to February support there around 49.30. If we do break back above that 50-day line and the March resistance line, then the next level up would be towards 52.20. But with the RSI failure at neutral 50, it looks as though we may have to be prepared for a move below 5,000. The next market is, as usual, the NASDAQ 100. And here we've got that uptrend line there from back in October. That's roughly around the 17,200 level. And below that runs the risk of 17,000, which was the April support zone. If we do break back below both those areas, then the next level down would be January support, 16,500. But ideally, we managed to avoid that scenario and stay above the October uptrend line. On the upside, the 50-day line is currently falling at 17,900 is resistance, as is the March resistance line at 18,100. Like the S&P, we also had a RSI 50 breakdown, and that tends to be a leading signal or indicator on the downside. Moving on to the stocks, most of which are in a happier place than the indices at the moment. Here we've got AKA brands, and here the picture is that of a rising trend channel, which I will complete in a second. Here you can see that we've gapped up through basically the old resistance there from the beginning of March. The upper parallel of the rising trend channel, the uptrend line are drawn up to $22. So we're looking for that by the end of this month, while we remain above the top of that gap there from back in March last year at $16. So above 16, looking for 22 plus here at AKA. Next up is another potential recovery situation, BioAtla, and here rising trend channel in place since back in September last year. Top of the channel currently heading towards the $4.10 area, so we're looking for that hopefully by the end of this month. Bigger picture target maybe by the end of next month would be up towards $5.60, the upper parallel from back in March last year. Upside valid while we remain above the 50-day line around $2.75. That's rising, so that also helps the cause. Moving along to Cytomex, and here it's interesting that we had our sort of eyes on the $2.80 area, but it's obviously been blown out of the water. There is a resistance line projection from the, basically 2 years ago. That's heading for $5.50, so we're still hoping that we can have a sustained push to $5.50 over the near term. The key here, though, is remaining above the old 2023 resistance at $3. So a little bit of a wide range and a volatile range potentially to come there for Cytomex. Another near-term winner is coming up in the form of Cyclacel, and here we hit the top of that broadening triangle base that we were looking for. That was up there at $3.30, and still looking for a retest of that area while we're above $2.30 and the 50-day moving average at that particular zone. The rally here started with a bear trap island reversal, so gapping down and then gapping up, so quite a strong signal, and the likelihood is that we could have more on the upside. Moving on to a great looking chart in the form of GeneDX. Here you can see that we've blown the top off the rising trend channel target that we were looking at before, around $18.30. Above that, looking for the upper parallel of that channel from back in August last year, as high as $25, hopefully by the end of this month or even sooner. Obviously, we've had 2 very strong days after the unfilled gap to the upside to start this week. The other point to note is the way that ahead of the gap up, we had multiple support points at the RSI 50 level, which tends to be a leading indicator on the upside. This stage only back below the previous day's close, around $17, really delaying the upside scenario on GeneDX. Next up is lead, and here we can see that we had a nice bounce off the rising 50-day line around $1.95. Above that, we're looking for as high as the top of that rising trend channel from July last year, moving up to $3.90 by the end of next month. There's obviously a resistance line there from back in March, and we've broken that around the $2.30 area. So the longer we stay above that, the better for the bulls. Next up is MediaCo, and here another rebound, in this case above the rising 50-day line, a gap fill rebound in fact, so bouncing off the floor of that April gap at around the $1.50 level and heading higher. We're looking for progress within that rising trend channel from the beginning of the year, retesting the $5.70 area, which was briefly where the shares were back in the early part of last month. Another exciting situation coming up with New York Community, and here broadening triangle base, we just hit the 50-day line there. That's around the $3.50 level. Want to see an end of day close through that to give us the potential of a move up to $4.80 by the end of next month. Pinterest, I think, had a good update just during the week, and here we've got a rising trend channel, massive gap to the upside. So it's a bear trap island reversal, so gapping down back in February and then gapping up twice in the recent past. Top of the channel there as high as $44. We're looking for that over the course of May while we remain above the old February gap floor around $37.50. Moving on to Rent the Runway in this case, and here we've had a bounce off a rising, or above a rising 50-day line around $8.60. Above that, looking for the top of that broadening triangle from the beginning of the year at $19.29, ideally by the end of this month. We've had an RSI 50 rebound as well, which also tends to be a good leading indicator on the upside. On to Rocky Brands, where there's been a nice gap higher as well. Here we've got a rising trend channel. We also had a bear trap gap reversal back in November to start the rally. Top of the channel there now as high as $41, which we're looking for by the end of this month, while we remain above the old February resistance of $31 on an end of day close basis. The last two are coming up next. First one is Sermodix, and here broadening triangle and gap through the 50-day line. The longer the shares remain above resistance on the way down, 29.66 or so, the greater the chance of a move up to the highs, $39 plus, hopefully by the end of this month. There is some support there, or in terms of the old resistance becoming new support at just below $31. Maybe people are close to the stock would use that as their level. Finishing off with a new name, Ventyx Biosciences, and here it's got the first hint of a rising trend channel base after obviously massive declines that we've had before. Uptrend line there from January looks as though it may hold the stock around $3.60, and the initial target now would be up to $6 sometime later this month. That's it for me today. More updates tomorrow.